Okay, so we're just about 1 hour after the rollover, so we're heading into the start of Tuesday's trading, August 27th. It's still the 26th here in the United States, and we're looking at the 30-minute. So the question that we're going to answer here in this video is whether or not I'm going to be trading any HL30s and if I'm comfortable with trading HL30s now. Back in July, maybe, but just about I think it was like the second or the third week of July, I noticed that one particular week I executed a couple of HL30s and they didn't work. So with the HL30, we use a 20 pip stop and a 20 pip target. And sometimes when the HL30s begin to, when it seems like they're just not working, meaning that the movement, the price structure, it moves around a little bit deeper after the overnight session or during the overnight session after the rollover. And when that happens, it's sort of an indicator to me that things might be changing as far as the price structure. And then from that point on, I noticed that things were definitely starting to really change. And then it got more and more difficult to trade through July and then August. So after that happened, I had said that I'm no longer going to use the HL30, and I don't think it's a good idea because I think that the price movement isn't, the 20 pip stop won't keep us in the trade. It's better to use a Tech 1 trade is basically what I had said back in July. The Tech 1 trade is basically the same thing, but with the HL30, we're looking at the Euro Yen. So I wouldn't even really consider trading the Euro Yen. It works. The HL30, when it does work, it works fine. But with the Euro Yen and the Pound Yen, I use a 40 pip stop and a 40 pip target because they cover a bigger distance. So generally, most people will stay away from executing the HL30 on the Euro Yen or the Pound Yen. So we're not even going to talk about that. We're going to start here with the Euro Dollar. So this is the Euro Dollar 30-minute time frame. There's the start of the new day right there, the dotted line, that's 5 p.m. So this is how I would go about setting up my charts. I would go and identify yesterday's low and then yesterday's high. Now, there was an HL30 that set up, I think it was either on the Euro Dollar or the Pound Dollar, after the market opened. There was an HL30, and then it failed. It would have failed. I think this is the first one. It's either this one or the Pound Dollar. I didn't trade them, but I was watching them. This one closed at 45, and the high there was 63. That wasn't the one. I think it was a Pound Dollar. It was a Pound Dollar. One of them printed an HL30, and it would have failed because it didn't go to its target. I think this might have been the one. There's one of these two candles would have been the HL30. That's 60, and then you've got a high here at 83. So getting in at 60 approximately using a 20 pip stop, that would have stopped me out. So the Tech 1 trade, though, if it would have been traded correctly, which is again a sell and the same candle pattern as the HL30, but the stop would have been above the most recent price swing high. So it would have been above that high, and that would have held, and then it would have worked to the target. So that's why I was saying I wasn't going to trade the HL30s, because the pullbacks after the 5 o'clock during the what is usually the slower time, the Asian session, that overnight trading session is what I refer to it as. The movement's usually pretty contained, and it doesn't usually go against my position on an HL30 more than 20 pips. But again, with this, the way the market conditions have changed, that's why I suggested just avoiding the HL30. So we've got yesterday's high, yesterday's low. I still am not comfortable with trading the HL30 just yet. I still think that if I'm going to trade anything that looks like a reversal, it's going to be the Tech 1 trade. So the Tech 1 trade, again, requires a stop loss placement above the most recent price swing high, and then the targets are different. So it's still typically and normally the risk to reward is still 1-to-1, sometimes a little bit better. And but again, you have to measure it. You have to calculate it. It really depends on where the setup takes place in relation to the high or the low. So I'm going to review what I think is going to happen here, but I wouldn't trade any HL30s. You'll notice that price is pretty close to that low. The low from yesterday was 93, and it's sitting here at the 00. So it's within the 10 pip range, and it might print a bullish candle. And it might work. It just might work as an HL30. Some of them, occasionally over the last couple of weeks have worked, but I'm still not trading them as HL30s. I'm trading them as reversals. And again, because the 20 pip stop may not keep us in the trade on the HL30s, but using the appropriate stop loss, which would be below the price swing low or above the price swing high, depending on which direction you're trading it in, that would work. And it has worked consistently. So there's a few things to determine there. So we're going to go back and look at the euro dollar here in just a moment, but I'm going to scan through. Here's the pound dollar. So the pound dollar, I would have to make adjustments here. There's yesterday's low, and then here's yesterday's high. So in a situation like this, yesterday's high is here, and then we've got Friday's high right there. So if price was up here at resistance testing yesterday's high, I would not trade it off of yesterday's high. I know that it might spin around and go right back up and test the overall high, but it's not even there anyway. I mean, I don't think it's going to be an issue, so I wouldn't trade it that way. This looks like a bullish candle. I mean, there is an HL30 right here. That candle right there is an HL30, and it's higher than the previous day CCI reading. So it's a perfect HL30, and the close on that candle is 18. So again, using a 20 pip stop and a 20 pip target, well, 28.38 would be our target. It might work. It just might work. But again, the HL30s are only working occasionally, and it really means that, again, if I'm going to trade it, I've got to put the stop below the actual low in price, the most recent low here, which would be here, yesterday's low. So then if I'm expecting it to go to the 20 pips, I got to make sure that I'm able to use about a 20 pip stop loss. If it's 30, then I've got to calculate whether or not I think it's likely to go 30 pips. I think that these two, the pound dollar and the euro dollar, are likely to go a little bit lower, at least right now. Maybe in the next 4 hours, I would change my opinion and it'll stop and it'll hold and it'll be obvious. But it has definitely pulled away from the highs of Friday, and the retracement's been pretty deep. We're going to look at the larger time frames for the euro dollar and the pound dollar, and I'll show you why I would rather not trade against this. The HL30, the other condition that needs to be in place for the HL30 to really work effectively is that we want to trade it in the direction of the trend. Well, if we tighten up the charts, we see that it's been in an uptrend, so it could work, but it has peaked at this point, and I still think it's likely to move down a little bit lower. At least that's my opinion right now at this hour. So again, on the next hour or two, I would change my mind if it looks like it's going to form a solid support. And even if it does, and Tuesday it trades higher, it's probably going to give me an opportunity to trade some kind of a Tech 1 trade up again. And then I still have this range of consolidation that we've been talking about for today. It's set up last week with the highs and the lows, but it is an effective range of consolidation. It's approximately 90, I think 96, 97 pips or something like that from the high to the low. And that's okay. That's exactly what I need. I need a good range of consolidation. It cannot be less than 55 pips, because then it becomes, it increases the possibility that if a candle closes outside of that range, if it's 55 pips or less from the high to the low, that it could turn into a head fake. So again, I'd rather not, but again, I'm going to look at the larger time frames and show you what I'm talking about here. This is the dollar yen, and here we've got yesterday's high and then yesterday's low, and it's pretty close. The other thing that sometimes happens is that with enough time, if you wait enough, so let's say that the euro dollar, we're looking at the euro dollar, let's say it sets up an HL30 and it works, and then maybe or maybe it's just the pound dollar and it works, and then maybe a little bit later this becomes a lot more obvious here in the dollar yen, and it looks like it's going to hold, and I can see that because they don't all set up at the same time. And then the market overall might be reacting and working together in unison the way we would expect it to in a normal environment, and it might just really easily set up an HL30 for me to trade here on the dollar yen. So while I think it's risky, with enough time it might eventually look less risky, because there are signs and signals on the charts that technically it's holding at these specific levels, whether it's the euro dollar at support and the pound dollar at support, or the dollar yen here at resistance. It's possible. Now, I've been talking about most of the morning that it looks like the dollar yen could return and retest a little deeper into Friday's high. I don't know that for a fact, but it looks like it still could. And we'll look at the larger time frames to identify why. So right now, again, I would still prefer to avoid HL30s even if they work. This is the euro dollar, this is the pound dollar, and there is an HL30 there, but I would prefer to stay away from them. It looks like it could easily come right back down and retest, let's say, Friday's low in here. And if it does that, it's going to stop me out 20 pips. So there's no point in me trading it. I'd rather wait until it really finds a solid support level. But I still think that these two are there's still the possibility that these two, the pound dollar and the euro dollar, could drop a lot lower in price. So let's go to the larger time frames. These are, what we're going to look at are the charts that we were reviewing this morning. This is the euro dollar 1 hour chart. So we talked about this A low and this B high, and then we were looking for support levels. It looked like it was holding right around the 50 for a little while this morning. Now it looks like it's holding around the 618 for a little while. Again, if it's going to give me an opportunity to trade it back up, I'm not worried about missing the first chance because it's going to wave all the way back up. It's going to give me another opportunity. But what I still think is that what caused the move on Friday and how the markets usually react to moves and information like that, what occurred on Friday, the way it typically does. I'm not going to get into the details right now. We talked about it all morning. And you can easily look into what caused the moves on Fridays if you missed it. So again, I apologize. I'm just not going to go there right now because that'll be another 20 minutes into this video. So I'm just going to try and focus here on whether or not I should be taking these HL30s and where I think price is going and why I would avoid the HL30s, because that was the key question here for this video. Is it okay to start trading HL30s? And again, I'm not comfortable with trading HL30s yet. So what happened on Friday, typically this kind of behavior, we see price come right back to the mean level, which is where it initially starts before the announcements or the rumors or the comments or the information or the political statement, whatever it was that caused this. And again, we classify them into whether or not it's a solid economic report that's going to cause some kind of reevaluation in this currency pair due to interest rate policies, or is it just subjective positioning from politicians stating their side, whose side, what side, whatever it was that was going on Friday? You get my point. So if it's not Fed decision on interest rates or something to that effect, that it's a solid announcement that we know as traders, the market is going to trade that reaction due to the expected change in price, right? Due to, what the dollar, if we're talking about the dollar, let's say. Again, depending on what caused this, for example, like non-farm payrolls, I'll just get right to it. Non-farm payrolls, if you're trading off of non-farm payrolls and the market's taking non-farm payrolls as one of the key components to price direction, for, let's say, for a whole month, and it moves in cycles. Sometimes non-farm payrolls is really not a big deal. We don't pay attention to it that much, and the information doesn't really matter at that point. It depends on at what point in the cycle we are currently at. Right now, we're focused in on different things other than non-farm payrolls. But for example, if it was non-farm payrolls that caused this move, well, then we know that those numbers are likely to have an impact on the decision of interest rate policy. Maybe not immediately, but the accumulation of all of this information could eventually make Fed decision, to either step on the brakes or give it some more gas, right? Depending on what cycle, where we are in the cycle. So this wouldn't surprise me, and it didn't necessarily surprise me to see price come back down, and I still think there's more to it. I don't know that it's going to come all the way down to the A low, but I think it's still likely to move a lot lower. So then the next question this morning in the chat room was, well, why don't we just go ahead and trade it if it looks like it's going to go lower and you think it's going to go lower? Well, I don't know that for sure. That's the first thing. This is still risky to me. And in my opinion, the way I would prefer to trade it is, first of all, the moves were back up here right after the open. And if I miss these and I don't call these trades out because I'm not, let's say, in the chat room and I'm not trading at this time, well, then I'm not going to get in and jump in here in the middle of it because, again, the bounce off of the 50 would not have worked and it would have rolled over, and maybe the bounce off of the 618 isn't going to work and it's going to roll over. You get my point. So I don't want to chase this and try to trade it back up again, or try to sell it because there's a possibility that it could swing back up a little bit higher and retest the 382 before dropping. All of these things can happen. So in my opinion, and I said this morning, it looks like the train has already left the station. So it's already in play. I'm not going to chase a trade like this. So the next option for me, the way I trade it personally, is to just simply wait for price to either settle at support or resistance and then trade the reaction. I'm either going to trade a bounce down here, which is going to be pretty obvious at that point, or a bounce off of resistance, which would probably be obvious. And if it holds here and then it rallies and comes back up and takes out the B high with a 1 hour candle and it prints something that looks like a continuation breakout trade, then I would be happy to trade that if I can find out exactly what caused the breakout, similar to what happened on Friday. So again, I personally think right now that it's still likely that these could go lower, but I won't jump into a trade right now and just start selling it at these levels. It's just, like I said, these trades have already taken place back up here and I've missed them and I'm not going to chase them. So the next thing for me to do, the safest, which also helps me minimize the stop, is to wait for it to settle and then trade off of that. So the same thing goes for, this is a 4 hour chart. So on Friday we were talking about this over the weekend, that there was that continuation breakout trade. And it rolled over and moved right back down again. And remember, whenever we see a continuation breakout trade, we've got two options. We can get in right when we get the 3 pip entry, but if we can figure out or calculate that there's likely to be some kind of a retracement, then we can skip getting in with the 3 pip entry, wait for the retracement to take place, so that way we're not in it when it's retracing, and then wait for the bounce, and then wait for it to come back up again, if it's going to trend in the direction of the breakout. And this is not. This is actually pulling back pretty deep. It doesn't necessarily mean that it can't go any higher. It can, but I still think right now at this moment that that's exactly what we're seeing, until I get more information that I can find technically to prove that it's stopping, or if it's likely to continue lower. Just the same, as much as I think it is likely to continue lower, I still need more confirmation of that fact. So again, there's the 1 hour chart. Here's the A, B, C. We were watching it this morning, and then it bounced several different times. The 382, the 50. It's just, I'm going to stay away from this. I don't think it's going to stop here. So that's why I wouldn't trade the HL30 right off of that support low from yesterday. So let's take a look at the pound dollar. Pound dollar, same thing. 1 hour chart. Again, the pound dollar moved differently, and for obvious reasons. You remember what happened on Friday. The pound dollar didn't move the same way that the euro dollar and the dollar Swiss and the dollar yen. And this is now my range of consolidation. So I'm going to open this up. I've got last week's high right there, and I've got that price swing low. And this is my range of consolidation right here. So I mentioned there's a high of 93 and 92, so it's about 100 pips, give or take the spread. This is acceptable. This is an acceptable consolidation range. Again, from that high to that low, if it was too small, if it was only like 48 pips or 40 pips, then the chances are greater that if a 1 hour candle closes outside of this range, it could turn around and go back up inside a consolidation, and it's just sort of wiggling around and pushing the barriers, the levels, right? The resistance and support, and I would have to make some adjustments until I finally settle in on the right range. So again, I'm not ready to trade a bounce here. You can see that actual support low. This might move up a little bit, but then turn around and come back down and then retest. That might be a better option. That was what I was saying with an HL30, but with an not an HL30, a Tech 1 trade. But a Tech 1 trade, I would prefer to trade it off of support or resistance. So very often there's a lot of traders that trade reversals, and they don't like trading reversals off of these levels right here, the way it's still sitting it's sitting above the actual resistance. It really didn't touch it. And it really didn't come that close to it. I mean, it's close, but not close enough. Some traders prefer to trade reversals when price goes through the actual support low and then turns around and comes back up again. And then they feel a lot more confident and comfortable trading that type of reversal. And very often I look for that pattern as well. So right now I can see that it's holding, but I don't know that there's enough momentum to drive it higher. And even if it works as an HL30, I don't want to look at it, because I know that most of the HL30s aren't working, and all of the stuff that I've just described here, I mean, all of the information, all of the analysis that I've done here leads me to believe right now at this point that it's still likely to turn and come back down and test the lows one more time. Now remember, I don't necessarily, like, I don't marry into a decision where I'm not going to break that thought. Uh, the next few candles or a 4-hour candle could cause me to change my opinion. So I'm going to continue to watch this, but I'm not trading HL30s here, and these are the reasons why. Um, let's go to the dollar yen. I think we were looking at the dollar yen this morning too. Yeah, dollar yen. So here, the same thing that was happening this morning. We had that A low, B high, C retracement, and then there's that Tech 1 trade. And again, with the chat room, I was not in the chat room at this time when this Tech 1 trade developed. But you can see there, when that Tech 1 trade developed, this is not a continuation breakout trade above the B high. This is just a move lower. It paid to its targets on the continuation breakout trade on Friday. And then everything is reversed and gone right back up again. And again, this is the same pattern and the same behavior, just not as deep in the euro dollar or the pound dollar. But this one has gone up a lot higher and approached really close to the level prior to the initial drop from Friday. And it's because of what caused it. That's what I kept repeating today. And I say this all the time. We classify moves like this, especially the gaps. We were talking about trading and filling gaps. What causes it? You can classify them into two different things. They're either a solidified economic report that's going to have some kind of impact in the interest rate policy and the pricing of this particular currency pair, or it's a statement and a rumor, and then that's going to be temporary, and the market will react to it, but it's going to end up filling and reversing and going back up to the levels prior to the breakout or whatever it was that caused it. So is this connected? Yeah. Let me go ahead and take that away. So this would have reached its final target anyway. One of the next targets would have been 50, but it had hit like the 00 and the 20 all the way back up. I think that it's still likely that this could spin up one more time and then come back down. And if it does that, I'll be looking for an opportunity to sell it up there at resistance. If it doesn't stop and it goes above resistance, Friday's high, and then closes with a 1-hour candle, then it might print a continuation breakout trade to trade it higher. At that point, I'll be going over to the Japanese yen futures and looking for the same pattern, and then looking for the breakout on the Japanese yen futures with some volume. And if I see that, then I know I've got a confirmed breakout trade here on the dollar yen. So again, I'm not going to trade any HL30s. Tech 1 trades are fine, but price isn't at the levels that I would consider really trading a Tech 1 trade on any of these three majors. And then, of course, as I mentioned, the HL30s can be traded on the euro yen and the pound yen, but most people don't want to trade them because of the 40 pip stop and the 40 pip target. They still work when they work, just like they do with the majors, but a lot of people just don't like the extra, the increase in the stop loss. So we just avoid talking about them altogether. Tech 1 trades, gladly, in the euro yen or the pound yen, and then the continuation breakout trades when they occur. But again, right now, these currencies and the pricing, the levels where they're sitting, they're not really at the levels that I would consider getting in with some kind of a Tech 1 trade just yet. So I'll keep watching it, and then the next video in the maybe the next hour or so, I'll release that, and we'll review the daily charts, because there were some pretty interesting patterns setting up on the daily time frames, and I'll review that with you. That'll be a short video when I send that out too.